The power of a new construction cost segregation study can save you thousands. That's today's show. Let's dive into it.
Here we are at our very first rental property.
Hey everyone, I'm Clayton Morris, longtime real estate investor, and I've built multiple seven-figure businesses. This channel is focused on buy and hold real estate. That is the number one way to build wealth, I believe. It's how I've done it, and that's how we're going to help you do it as well. So today's topic is high level. If you plan on starting a new residential construction project soon, you may want to consider adding what's known as a cost segregation study to your overall plan. Or better yet, utilize a full-service real estate investment company that conveniently builds a cost segregation analysis into their new construction projects. It's an extremely important element, and it allows for tremendous tax-saving opportunities that are often overlooked. The chance really to greatly accelerate depreciation deductions on land improvements and personal property early on in the game. So you can save more money in your pocket. Whether you perform a cost segregation study on a single family home, duplex, or another type of rental property, you will literally save thousands of dollars in this process. All right, so what is a new construction cost segregation study? A new construction cost segregation study is a mouthful, number one. It's a thorough analysis of a non-structural components that make up a property for the sole purpose of reclassifying these eligible items into different tax classifications. Simply put, this pulls the eligible assets out of real property section 1250 in the tax code, which depreciates over the entire lifetime of the property, and then instead it puts them into the personal property and land improvement section, which is 1245, 1250, 1245. With new accelerated depreciation timeframes. It's basically reclassifying the way the house is taxed and depreciated, taking it out of the longer, more slow process into the faster, more accelerated process. But you need to do this with a proper CPA. So this is not something you can do on your own. Just a reclassification of certain things in the home and putting it in a different section of the tax code, leaving more money in your pocket. Doing a cost segregation is one of the most powerful tools an investor has at his or her disposal. The tax savings is phenomenal. Yet another reason that real estate is one of the best ways to build wealth, in my humble opinion. So reclassification of property assets allows for faster depreciation rates. Now, I'm not an accountant, but this is how it works. These newly assigned items are depreciated over a shorter tax life. We're talking 5, 7, and 15 years, as opposed to everything being lumped into one real property depreciation time frame of 27.5 years. Therefore, it significantly accelerates the depreciation on these eligible items, which in turn greatly decreases your tax burden and increases your cash flow in the earlier life of the investment. You don't have to spread it out as far. So as you can see, performing a cost segregation study on a new residential construction project is certainly a smart real estate tax strategy that prevents your money from being tied up in one property. This allows for the flexibility to allocate your funds into other real estate investments, so you can quickly grow your portfolio. So if your portfolio is growing and you need to find reliable rental property insurance that will maximize your cash flow, you need to take a look at Arcana Insurance Services because we utilize them for all of our rental properties. We'll have a link below. Super easy to set up your insurance. Now we're going to talk about how these items are broken out and accelerated depreciation timeframes like the roof and other things. So a cost segregation engineer will do a thorough analysis to determine which real estate property items are eligible for accelerated depreciation. Now this comes down to assigning components into 3 different classifications. So let's take a look at each classification to better understand where new construction property elements may fall into place. All right, number 1, building components, personal. This includes certain items that are brought into, installed, or applied to the residential property, and they're separate from the building's structure. This includes kitchen cabinets. That's one big example of a building component. Here's another one, site work land improvements. Site work includes improvements to the area where the structure will stand. However, it would have to be done before the foundation is applied and before going vertical on the house. This might include soil removal or grading of the property. Site work land improvements could also include work done to the surrounding area, the immediate construction site, Laying down a driveway is a perfect example of land improvements, sewer structures, things like that. Then building structure. This would be the building and its structural components, items such as the foundation, the plumbing. These are all things placed inside the building structure category. Now let's break it down a bit further with some additional examples of items that might coincide with each cost segregation category that we've got here. Along with their depreciation timeframes, these are very important. So the 5-year building components, moldings, flooring, carpeting, ceiling fans, wall coverings, window treatments, specialty plumbing for kitchen sinks and washer hookups, security, and appliances. The 15-year category, site work land improvements. That might include driveway, landscaping, irrigation, exterior fencing, patio, porch, concrete. And then that 27.5 that we all know so well, that's just the basic building structure foundation stuff. Roofing, HVAC, electrical, plumbing, fire protection, alarms, exterior facade, building, skin, doors, windows, frames. You get it. So the benefits of performing a new construction cost segregation analysis sit in that 15-year window. That's the hint. So at this point, you might be realizing that you can't afford not to perform a cost segregation analysis on your property. This especially applies to single-family homes and duplexes that are used as rental properties. That's what we build at our company. A professional cost segregation analysis on these types of residential properties can significantly reduce the amount paid to the IRS in that first year and in the years that follow, which will save you thousands of dollars. So if you want to even learn more about lowering your taxes even more, you may want to read the great book, Tax-Free Wealth. It's an outstanding book by my good friend, Tom Wheelwright. We will have a link below to that amazing book. So take a look at these benefits of performing a cost segregation study on a new construction of a residential rental property. So these are studies performed on the new construction of a single family home and duplexes, and they can increase your tax savings by adjusting the time frames of those deductions and not spreading it out over 27 years. This can save you an incredible amount of money, as well as free up capital to invest as you see fit. Now, you may lose all the depreciation eventually, but cost segregation will allow you to accelerate the return on your investment in a much shorter period of time. So you're going to see a lump of cash immediately. You'll still continue to depreciate items over the lifetime of the property, the 27.5 years. But however, because a certain percentage of that is reclassified and you're accelerating it in the first year, that means you're giving the IRS less of your money on an annual basis. So this reclassification of property assets within a new construction project allows you to benefit financially from new land improvements. There we go. That typically can't be written off on existing rental property purchases or renovations when you buy something that's already there. So this tax strategy creates an audit trail that supplies you with the necessary documents for costs and classifications in the event that they are ever needed by the IRS. You have them all in your folder. So you may be asking, can I perform a single or a multifamily home cost segregation myself? Well, the money that you save from having a cost segregation performed on your new rental property construction will far outweigh the fees associated with hiring a cost segregation study expert. Plus, you also have the option of having the analysis cost built in to the new construction price, normally at a reduced rate. So you want to have an expert in the field perform the cost segregation study, and it's going to ensure that it's well documented and it's correct, as well as done in such a way that will maximize your tax savings. So you can't do it yourself. You have to hire a proper licensed CPA that can do it. You have to have an engineer do a cost segregation study on your new single family home or duplex. It's the best way to go. You have to do it that way. That's certainly something we do all the time. So it allows for a professional and an accurate assessment of classification and cost estimating of new construction projects, which will maximize your tax savings. Experienced cost segregation specialists will have the ability to read blueprints, analyze architectural drawings, bid up documents. They're going to look at other crucial documents that play a part in the analysis process. And they fly into town and spend days at your property. Cost segregation studies are performed by a construction engineer with extensive knowledge of the tax law. These are not amateurs, okay? They provide asset classification organization along with explanations if needed. So no research or guessing on your part. They are the expert. So if you were thinking about trying to do your own cost segregation study, then it's possible that you might also be contemplating managing your own rental properties also. Don't do it, folks. If this is the case, you might want to look into some free online property management software to think about, which we'll have a link below to that so you can do it yourself if you're going to. Let me give you a sample here of the cost segregation study on a new construction single family home. So this is an example now. If you had $100,000 in cash that's not invested and you happen to pay a 37% tax rate on it, you would have to pay $37,000 in taxes to the government. But if you invested this $100,000 as a down payment on the new construction of a single family home rental property, and then you perform a cost segregation study, the amount you would owe to the IRS would be considerably reduced based on this following example. Purchase price, $400,000. Down payment, $100,000. Cost segregation write-off, $70,000. So multiply that $700,000 cost segregation write-off by the same 37% tax bracket, and you have a $25,900 savings. This means you would only owe $11,100 to the government in that first year. Boom! Mind blown? Now you know why I love this so much. This is, again, not amateur YouTube stuff here from some amateur YouTube guru on real estate, okay? This is advanced level stuff that the wealthy people understand. It's why I love this so much, and I'm so thrilled that you're watching this video. But we've got more to get to, so please hit that like button if I'm helping you so far, and smash that subscribe button as well. Okay, let's get back to it. So take that savings of $25,900 and then add it to a $6,000 cash flow from your tenant. Now you have $31,900 return on investment. That equates to a 31.9% first year return on your $100,000 investment. Again, mind blown. Do you get it? Remember, you have a tenant in the property, right? With the cash flow. So even after expenses, you've got this cost segregation analysis done. You get the cash flow from your tenant. You're almost quintupling your return on investment. Follow me? So as you can see, utilizing a cost segregation study will greatly impact your bottom line. To further decrease your taxes, though, it's also recommended that you incorporate your real estate business. It will allow you to be eligible for even greater tax deductions down the line by running a business, okay? Now that you see the power of cost segregation when it comes to greatly accelerating certain aspects of a new construction property, you may want to consider integrating an analysis into your next real estate project. With this in mind, the most effective route would be to have your cost segregation study built right in to your construction project. This is smart. That's what we do. Morris Invest offers new construction properties, my company, with built-in cost segregation analysis that would cost thousands of dollars. We build it into the construction. You know, most people don't realize how much time and money it takes to perform a cost segregation study. Our clients are usually shocked to learn that we've already paid for it and it's already completed the cost segregation study when they buy one of our properties, so they can immediately in that first year use it on their taxes. A cost segregation study on a single family home or duplex can take up to 3 months or longer. But because it goes hand in hand with our real estate projects while we're building one of our new construction properties, and when someone purchases it with us, the study is already performed. This allows the buyer to accelerate their depreciation at a much faster rate, therefore, maximizing their tax savings, which is awesome. So our focus is on single-family residential properties and duplexes, making us experienced industry leaders in that area. That's what we do. If you're interested and want to book a call with our team, you can at Morris Invest. Let our team of seasoned professionals help take care of all of your cost segregation details. We'll explain it to you over the phone. You can book a call with us at the link below. So we want you to take control of your money with a new construction cost segregation study, because wise real estate investors utilize the power of cost segregation studies to reclassify their new construction assets on their single family homes and their duplex real estate projects. Look, this is incredible tax savings, and it can save you thousands of dollars in the early life of that property, as well as it giving you the freedom to allocate some of those additional funds towards purchasing other real estate investments if they see fit, or buying gold or starting a business. The alternative is not doing a cost segregation study and then sending thousands of dollars to the government for no reason. It just makes sense. Go ahead and book a call with our team at Morris Invest and let us help you with all the details of owning a new rental property and a new construction project with a built-in cost segregation study. We'd love to talk with you. But also subscribe here to the channel, please, and check out all of the other videos we have here to help you become a real estate investor. Just get started. I believe it's the #1 way to build wealth. We'll see you next time, everyone.